Hey, how's it? Welcome to this edition of the SA Crypto Market Analysis with myself, James Preston.
And myself, Graham Tennant.
And this week's edition is again proudly sponsored by AfricaCom, the overseeing conference of Africa Tech. It's happening at the Cape Town ICC from the 12th to the 14th of November. That's now only a month away. That's a Tuesday through to a Thursday. It's Africa's largest telecommunications and tech conference. It has the biggest tech, the biggest telecommunications companies in the world, all showcasing their latest products, their latest tech, and their CEOs all speaking at the various workshops and conferences. Entrance is free, so all you got to do is go to Google right now and just type in AfricaCom, and it'll take you. The first result will be knec365.com. That's the guys who put on this conference. You just click on that link, go to the registration page, and fill out your details, and you'll be registered as a delegate. Please don't miss out. It is huge. They take over the whole Cape Town ICC, and if you don't register soon, you are going to miss out. Of course, with tickets being free, there's only a limited number. So go check it out. AfricaCom, 12th to the 14th of November. They sponsor this edition. Now, Graham.
Yes.
We are looking at a slightly different bias, I'm assuming. Last week's edition was 65% bearish.
Yes.
Has that bias changed since what seems to be a little bit, I mean, if I look at the chart here, that green candle there, a little bit of a bounce off of that support.
No, it was a pretty big bounce.
There, yeah. Are we reversing here?
My bias at the moment is quite closely aligned to where we were last week, actually.
Okay.
Although in between this week, I swung bullish and then back to bearish again now. So, and that's kind of been the nature of this market, is that it has been very topsy-turvy in this consolidation zone. But if we zoom out, and now we're looking at the daily chart here. Right now, this looks like nothing more than a consolidation time of rest for the market right now. And I think the high probability outcome here again is a resolution of this consolidation structure to the downside. This was very significant, I felt, this downside break that we had from the 10,000 level, where the market was finding almost like a new normal. But that break happened around the 22nd of September, and that break to the downside for me was the market saying I'm bearish. Okay, I want to move further down.
Yeah.
We've had a stop along the way. But I think that the high probability outcome here is another leg to the downside, and there I'm expecting to get support again at around about the 6,800, 6,000 level, which is what we've spoken about before.
Yes.
I think that we were sold a little bit of a dummy in the middle of this week, so I'm going to zoom in a little bit closer on the 4-hour chart. And here, and I highlighted this on the group discussion, but if we draw a trend line in here, you can see that we did get some squeezing, which looked like a bit of a falling wedge or triangle structure. I'm going to remove this line to make it less confusing. And there we broke to the upside. And I felt, okay, well now it's clearly shown a nice green candle. This could have been a bottoming out pattern, and now with this new momentum and conviction that we've seen to the upside, we're going to go back and visit the 10,000 level potentially. But then we got smacked down really hard. That caused that wick, and now we're moving sideways again. So it really has been a little bit uncertain.
So it's not so much that you're bipolar, it's actually the market's bipolar.
It has been the market
it's
somewhat.
It's a serious fight between bulls and bears at the moment.
And this has been a horrible time to have been in the market to trade on leverage in the short term, because these wicks, they take out your stop losses. And if you were in a long or short position here, it's unlikely that you've come out of this unscathed, and that's where your risk management becomes very important.
Yeah. So percentage-wise, what's your bias?
So I'll go 60-40. Not
60-40
quite as
bearish.
confident as I was last week. But yeah, 60-40 bearish. I think that again, I think that we break the downside here more likely than not. Look, of course, like we can move to the upside. That's definitely a possibility. But if we're looking for what's the most high probability outcome for me, from our perspective, I think we move down. But having said that, in the shorter term, I think it's going to take some time for us to squeeze and contract, build up that energy that we're going to need to move out of these bands.
Okay.
So I think for the short term, we probably move sideways with a bit more volatility. So definitely not interested in putting on any trades right now until we get a clear structure set up. And again, as a longer term trader, I'm still feeling fairly confident that we're going to visit 7,000, sub 7,000 numbers, and then I'll look to accumulate from a longer term perspective. So quite similar to last week, with a little bit of uncertainty thrown in the middle.
Right. So we're bouncing between these channels here, which looks to be around the 8,000 and 9,000 levels.
Yes.
For now. All right. Okay. So let's get on to this week's question of the week, as we are pushed for time. It comes from Cornel Grunewald. Cornel's actually in Iran, by the way. Iraq. My apologies, Cornel. I know you're in Iraq. And Cornel asks this. He says, for this week's question of the week, is there any correlation between Bitcoin and the S&P 500, as many people claim Tom Lee, for instance? And if so, what impact would it have on Bitcoin should those markets drop or collapse, as many people also predict a financial market collapse/recession? Would money flow out and into Bitcoin, or would it all go down together? That's a key part of his question. Would it all go down together? That's very interesting. What do you say?
Yeah. So let's start with the first question, or first statement. So he's talking about the correlation between the S&P and Bitcoin. So on the limited amount of research I've done in that area, I haven't seen any clear correlation between the two, or uncorrelation. So, and I think that probably points to the changing nature of Bitcoin and the fact that it's maturing. And Bitcoin today was very different to what it was a year or two ago. So, and having said that, I think it's going to look different going forward. So I'd be reluctant to try and find patterns looking back very far historically, because I think Bitcoin's changing nature is going to mean that it's going to be different at different times.
And it's such an immature market
as well. It is. So, I mean, this is a chart that's been doing the rounds, I think a month or two ago, which was quite interesting. And this shows Bitcoin, gold, and the S&P, and it shows Bitcoin moving up as well as gold when the S&P came down. But again, you have to take this with a pinch of salt. This is only looking at a 90-day period, which is really short. But I think that it's just too early to tell for sure what kind of correlation we can expect. But having said that, from a more fundamental point of view, I'm quite optimistic that Bitcoin is going to be that hedge and that uncorrelated asset towards traditional markets. And for me, the biggest reason is that it's not driven. I don't believe that the growth of Bitcoin and the price is driven by debt, because I think the crisis that we are expecting is most likely a debt-driven crisis. So then you look at what assets have been inflated because of debt: stocks, bonds, property. Those three are the big ones that have been inflated through debt, and Bitcoin sits outside of that, along with gold, silver, and assets of that nature. So that's where I believe that if you do have a collapse of that debt structure, then those assets and the value of those assets move into things like Bitcoin and gold. So I believe that that's where that uncorrelated behavior or uncorrelated relationship is going to come into play.
Brilliant. Very, very solid answer. So there we go. Cornel, hope that helps in answering your question. Very good one, by the way. Please join our Telegram group. I've got the link there in the description on the YouTube page and in the podcast notes as well. Join our Telegram traders group, where you can ask questions to myself and Graham for the next edition. Graham, that's where we'll leave it. Of course, this edition proudly sponsored by Africa.com. Check them out. Just go to Google, Africa.com, 12th to the 14th of November down at the Cape Town ICC, and entrance is free. Graham, thanks so much once again.
Cool, man.
Appreciate it. We'll see you in the next episode.
Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.